If you don't understand market structure, nothing else in SMC will make sense. Not order blocks, not fair value gaps, not liquidity, nothing. Market structure is the foundation of everything. It tells you where the market wants to go. And once you understand it, you will never look at a chart the same way again. Today I'm going to break it down completely. Break of structure, change of character, higher highs, higher lows, everything, step by step, with real examples. Let's go. Let's start with the basics. Market structure is simply the way price moves, a series of highs and lows. In a bullish trend, price makes higher highs and higher lows. Every new high is higher than the previous one. Every new low is higher than the previous one. The market is climbing. In a bearish trend, it's the opposite. Price makes lower highs and lower lows. Every new high is lower than the previous one. Every new low is lower than the previous one. The market is falling. Now the first thing you need to understand is what a swing high and a swing low are. A swing high is a candle that has a higher high than the candles on both sides of it. It's a local peak. A swing low is a candle that has a lower low than the candles on both sides of it. It's a local bottom. These swing points are the building blocks of market structure. Everything in SMC is built around these points. You see here, on this real chart, you can clearly see the swing highs and swing lows. Every peak is a swing high. Every bottom is a swing low. Once you train your eye to see these points, you'll start to see market structure everywhere on every chart. Now let's talk about the break of structure, the BOS. The break of structure is when price breaks through a previous swing point, and it's one of the most important signals in smart money concept. The bullish break of structure happens when price breaks above a previous swing high. It tells you that buyers are in control. The bullish trend is confirmed and likely to continue. When you see a bullish break of structure, you look for long opportunities. Now let's look at a real example of bullish break of structure on EU 1 hour time frame. You can see here the market was making a series of higher highs and higher lows, a clean bullish structure. Then at each swing high, price breaks above it. That's a break of structure, then another break of structure, then another break of structure. Each break of structure confirms the same thing. Buyers are still in control. The trend is strong and continuing upward. Notice how after each break of structure, price pulls back slightly to form a new higher low, then continues higher with another break of structure. This is the rhythm of a healthy bullish trend. This blue arrow represents the direction of the overall move. 3 confirmed break of structure, clean bullish structure. This is exactly what you want to see when you're looking for long opportunities. Now, the bearish break of structure. Same concept, but in the other direction. The bearish break of structure happens when price breaks below a previous swing low. We have our series of lower highs and lower lows. Then price makes a strong move down and breaks below the last swing low. That's the bearish break of structure. What does it tell you? That sellers are in control. The bearish trend is confirmed. When you see a bearish break of structure, you look for short opportunities on the pullback. Remember, break of structure always goes in the direction of the existing trend. It confirms that the trend is continuing. That's the key difference with what we're going to see next. Now let's look at a real example of bearish break of structure on GU 1 hour. You can see here the market was making a series of lower highs and lower lows, a clean bearish structure. Then at each swing low, price breaks below it. That's a break of structure. Then another break of structure. Then another break of structure. Each break of structure confirms the same thing. Sellers are still in control. The trend is strong and continuing downward. Notice how after each break of structure, price pulls back slightly to form a new lower high, then continues lower with another break of structure. This is the rhythm of a healthy bearish trend. This blue arrow represents the direction of the overall move. 3 confirmed bearish break of structure, clean bearish structure. When you see this, you are only looking for short opportunities. Never go against this. Now let's talk about the change of character. And this is where it gets really interesting. The change of character is the first sign that the current trend might be changing direction. Unlike the break of structure, which confirms the trend, the change of character warns you that the trend might be ending. Here's how it works. The market is in a bullish trend, higher highs and higher lows. everything looks good. Then suddenly, price breaks below the last higher low. That break is the change of character. It doesn't mean the market will definitely reverse. It means you need to pay attention. The balance of power might be shifting from buyers to sellers. Think of it as an early warning signal. The break of structure says the trend continues. The change of character says the trend might be ending. One confirms, one warns. 1 hour, we had a beautiful bullish trend, multiple higher highs and higher lows. Price was going up consistently. Then right here, price breaks below the last higher low. That's the change of character. And what happens after? Price starts making lower highs and lower lows. The trend has completely reversed from bullish to bearish. The change of character was the early warning that gave us this information before the full reversal was confirmed. This is the power of reading change of character correctly. You don't wait for the full reversal to be obvious to everyone. You catch it early. Now let's look at the opposite, a bearish to bullish change of character. The market was in a clear bearish trend, lower highs and lower lows. Sellers were in complete control. Then right here, price breaks above the last lower high. That's a bullish change of character. First sign that buyers are starting to take control. First sign that the bearish trend might be ending. And look what happens after. Price starts making higher highs and higher lows. Full bullish reversal confirmed. The traders who spotted the change of character early were already positioned long before the move became obvious. And here you can see exactly how traders use the change of character to find entry opportunities. When the change of character happens, we don't just note it and move on. We use it as a signal to start looking for an entry in the new direction. After a bullish change of character in a bearish trend, we go down to a lower time frame and look for confirmation. A small change of character on M15 inside a key zone, like an order block or fair value gap, that's our entry trigger. The change of character on the higher time frame gives the signal, the lower time frame gives the precise entry. This is the drill down method that we'll use throughout this entire series. Let me make the difference between break of structure and change of character crystal clear, because this is where a lot of traders get confused. The break of structure goes in the direction of the trend. Price breaks a swing high in a bullish trend. That's a break of structure. The trend continues. You look for longs. The change of character goes against the direction of the trend. Price breaks a swing low in a bullish trend. That's a change of character. The trend might be changing. You start watching for a reversal. One simple rule to remember: break of structure confirms, change of character warns. In practice, you'll often see this sequence on a real chart. Break of structure, break of structure, break of structure, trend is strong and confirmed. Then change of character, first warning sign, then new break of structure in the opposite direction, reversal fully confirmed. This is the natural cycle of the market, and once you see it, you can never unsee it. And here you can see that exact cycle on a real chart. First, a series of bullish break of structure. The trend is strong, buyers in control, you're looking for longs only. Then, the change of character, the first red signal. Price breaks below a higher low for the first time. Alert, the trend might be changing. Then, new bearish break of structure. The reversal is now confirmed. The trend has changed from bullish to bearish. Break of structure confirms. Change of character warns. New break of structure confirms the new direction. Learn to read this cycle and you will see it on every chart, every time frame, every pair. This is one of the most powerful things you will learn in this entire Smart Money Concept series. One of the most important principles in SMC is multi-time-frame analysis, and market structure is at the core of it. Here's the rule: always start with the higher time frame. Step 1, 4-hour or daily. You look at the overall structure. Is the market bullish or bearish? This is your bias. This is your direction. If the 4-hour is bullish, you are only looking for longs. Period. Step 2, 1 hour. You zoom in and look for the change of character that signals a possible entry opportunity in the direction of the 4-hour bias. Step 3, 15 minutes. You find your precise entry. A change of character on 15 minutes inside a key zone is your trigger. The rule is simple. The HTF gives the direction. The LTF gives the entry. Never fight the HTF structure. That single rule will save you from more losing trades than anything else. Now let me walk you through a complete real example using gold across 3 time frames. Step 1. The daily. I open gold daily and immediately look for the swing highs and swing lows. What do I see? A clear bullish structure, higher highs and higher lows. Every new high is higher than the previous one. Every new low is higher than the previous one. My bias for the week is bullish. I am only looking for long opportunities on the lower time frames. I will not take any short trades until this structure changes. This is step 1, and it takes less than 30 seconds once you've trained your eye to read structure. Step 2. I go down to 4 hour for more detail. On 4 hour, I can see the break of structure confirmations clearly. Multiple bullish break of structure. The trend is strong and confirmed on this time frame too. Then I see a small change of character. Price pulled back and broke below a higher low. Now here's what's important. This is not a reversal signal because the daily is still bullish. This is a pullback change of character. It tells me a possible entry opportunity is forming on the lower time frame. This is the key insight that most traders miss. Not every change of character is a reversal. Sometimes it's just a pullback inside a bigger bullish structure. You need the HTF context to know the difference. Step 2 is done. Time to go to 1 hour for the entry. Step 3. I zoom into 1 hours to find my precise entry. Inside this pullback on 4 hour, I'm looking for a change of character on 1 hour that confirms the pullback is ending and the bullish move is about to resume. And there it is, right here. Price breaks above the last lower high on 1 hour. Bullish change of character confirmed. The pullback is over. The buyers are taking control again on the lower time frame. This is my entry signal. I look for a long entry in this area, ideally at an order block or fair value gap that we'll study in the next videos. Stop loss below the change of character low. Take profit at the next liquidity zone above. 3 time frames, 3 steps, less than 5 minutes of analysis. This is market structure giving you the complete picture from direction to entry. Everything we'll study in this series, order blocks, FVG, liquidity, it all starts here with market structure. Before we finish, let me cover the 4 most common mistakes traders make with market structure. Avoid these and you'll already be ahead of most people. Mistake 1. Trading against the higher time frame structure. If the daily is bearish and you're looking for longs on 1 hour, you're fighting the market. The higher time frame structure always wins. Always align your lower time frame trades with the higher time frame direction. Mistake 2. Confusing break of structure and change of character. Break of structure means the trend continues. Change of character means the trend might be changing. Getting these mixed up will put you in trades in completely the wrong direction. Mistake 3. Looking at only one time frame. If you only look at 15 minutes, you're missing the big picture. If you only look at daily, you're missing the entry details. Always start with the big picture and work your way down. Mistake 4. Marking every single candle as a swing point. Not every candle is significant. Mark only the clear peaks and bottoms that the market clearly reacted to. Too many swing points creates noise, not signal. Avoid these 4 mistakes and your market structure analysis will already be much cleaner and more accurate. In the next video, order blocks, what they are, how to identify them, and how to combine them with market structure to find high probability entries. If this video brought you value, drop a like. It helps the channel more than you think. Subscribe to follow the complete Smart Money Concept series from A to Z. And tell me in the comments, what was your biggest takeaway from this video? I read every single comment. See you in the next video.